Okay, welcome to the afternoon session of Metal Investment Forum. My name is Chen Lin. And this is a disclaimer. Basically, it's, you can read at your leisure. This is for educational purpose only, with no particular stock buying or selling. So first, before we getting started with all those investment ideas, I like to get into my investment philosophy. I run my family's asset, okay, and I've been, in the past few years, I feel pretty strongly that this industry, there has too many pumps and dumps in this industry. At the end, a lot of investors got hurt very badly at the end, okay, and there are always people, a lot of people I talk to, they think, oh, there's a smart money, there's a dumb money. So I am the smart money, and then other people are the dumb money, and I can buy a low and I sell to some sorry ass, and I get away with it. Seriously, there are a lot of people believe that. I don't believe that, but so I want to tell you there's a zero-sum trade. There's a lot of trade that are really zero-sum. It's someone, I have to make money off you, versus we need to create value, okay? Create value. So basically the old-fashioned way, For me, okay, I invest in all the different sectors, from mining to energy to biotech. So mining, I want to see the gold, or real copper, or anything that the silver got discovered. Or for the producer, I want to see them to create a dividend, informal dividend, or build up a mine for the shareholder. Okay, for energy company, we want to discover the oil and natural gas, and biotech, we want to cure cancer, right? So all these things, you need to bring good thing, not just to doing zero-sum trade. That's a very important philosophy of mine. So, how to invest? Okay, so what I see, okay, if some people make money, lose money, but if you make a lot of money, okay, very successful, that you have a better vision. What's the world going to happen maybe a few years from now? And then you invest it today, and then when it happens, as you expected, that's when people follow, and then when you make money, okay? And there's a lot of people, they come in, they basically ask me, oh, Chen, I want to be a subscriber because I want to hit a home run in certain mining stock, and so I can be rich. I say, that's not the way, that's not what I work. Okay, if you don't want to really gamble, you can go to Vegas, right? You can hit the lottery. You can keep hitting that, right? And so, but for us, for the investor, we want to make a calculated risk. Okay, so we want to be the house, not the gambler. So we want the risk reward to our favor. So how do we do that? We have a better understanding of the project. Okay, I do a lot of site visits. I visit all the different, lot of companies I invest in. Have much better technical knowledge and then deep understanding of the industry by its own. So the idea is you're going to have losses. There are losers and winners, right? So you have more wins than losers. More winners than losers, and then you win more in the winners than you lose in the losers, all right? So, and then at the end, for investor, when I look back 5-10 years from now, I feel like if you look back, your investment makes the world better. That's the way we look at it, either by cure the cancer or find the largest gold deposit or find oil and gas. Either way, we want to have a better future. That's the investment philosophy. So, and I also met a lot of people, they don't know how to hedge, right? So the people always ask me, how do I hedge everything? So because gold miner moved up and down with gold, should I just sell short gold to hedge gold miner or vice versa? For me, personally, I invest in different sectors and some in very different market cap, right? Some are small, some are big. And some investment have a very short-term horizon, some have very long-term horizon. I can potentially move money between all the different sectors. So I have mining, I have energy, I have biotech. So I've been shifting my focus, if people follow me, back and forth many times in the past decade. Okay, so usually at least one or two sector will do well. Like recently, when gold goes up, everything goes down, right? So you can see, just watch your portfolio. You can see there will be, there's some goes up, some goes down. For me, it becomes a natural hedge of my portfolio. The only thing. Only time I hedged was actually 2008, partially because if I monitor all the different sectors, when none of the sector is working, none of the sector working, I know something was wrong. So I think I was talking to my friend, including Jay. Jay Taylor was, by the summer of 2008, I became very pessimistic. I sold all my juniors. By the summer of 2008. I was able to buy them back at much lower price later on. So that's basically my philosophy, just my way of investing. So let's talk about the trade war and then global economy. I think some people already covered that. For me, I made a pretty good call last December when I told them this is time to buy gold when the Huawei executive was arrested in Vancouver. I know there's something very bad going to happen. So right now the situation is, as I'm Chinese, so I have a lot of contact in China. So it looks like very likely the phase 1 deal will be done before the deadline, which is December 15th. So there's many reasons behind that. Trump can tell his supporters that we get a deal done, we get reelected, and then we can turn on the screw again in my second term, right? So from China, my understanding is they think Trump will break they will have to redo the deal in the second term, first thing if he won. But China think, okay, Trump may not get reelected anyway. So we just get a deal done now. And then when you reelect, if there's someone else get elected, that's fine. If Trump got reelected, if Trump really tear apart the deal he signed a year ago, China is fine as well because Chinese, the Asian emperor, they always say we need to rule by the very high moral standard, even though they don't follow that. So they seem that's actually united the Chinese people. Okay, if you understand, actually for those Chinese leaders, the power is very important. If you follow all these recent, development of power struggle between the Chinese leader, like Xi's opponent Paul, he's in prison, serving lifetime in prison, right? So that's what happened when the leader lose power. So for the Chinese leader, the power is most important. So it seems to me, okay, so both sides want to reach a deal. And China tried to squeeze Trump as much as possible because she doesn't face re-election, right? Trump does. So China tried to get as much as they can in phase 1 deal. There's some obstacle, there's some issues, but I think they will go through that. Second, phase 2 deal, very unlikely because it's presidential election. They got a phase 1 deal and then that's it. Okay, and that means a lot of tariff will stay on. China will try very hard in the squeeze a lot of things in the phase 1 deal. So because they also understand the phase 2 deal may not come. So we are already experiencing the global slowdown in 2019, the question really is, are we going to have a recession of 2020? That's something to watch. So far it's slowing down. It hasn't hit recession yet. Okay, and then next question would Fed cut more interest rate 2020? Okay, that's another we need to watch. Here's all the different economy data statistics coming out. So the near term, the trigger event. So what I see, okay, if they really reach a phase 1 deal in a month from now, the gold probably will take a hit, okay, most likely. But as you see, the Hong Kong protests start to intensify. Okay, for full disclosure, okay, my wife is from Hong Kong, okay, so I have a very close connection to Hong Kong, and to clarify, none of my family, extended family, support the violence in Hong Kong. That's for full disclosure. But this creates a very interesting opportunity for the gold investor because what happened if China really cracked down the Hong Kong protest, right? What if as investor, we need to see what's going to happen. So they can declare martial law, they can move the National Guard in, right? All these can happen. So when that happens, the consequence will be United States will cut off the Hong Kong special economic status, right? Hong Kong, because after British hand over to China, China guaranteed 50 years of capitalism, and then United States and then many other countries signed the deal that we guarantee the free trading with Hong Kong. So a lot of trade from China to United States, vice versa, are through Hong Kong. So if that got cut off, it's like another tariff. If you look at it this way, it's like another tariff. So that will actually ignite, I believe, will ignite another round of a rally for gold. And the timing of that is very hard to predict, but most likely will be after the Taiwan election, which is January 11th of next year. You know, the reason was that Taiwan has a very tight election between the pro-independent and then the more status quo. So the pro-independent is ahead. So last thing that the Chinese government want to do is at this moment to crack down Hong Kong and then help the pro-independent. So most likely it will be sometime in January, probably late January, should be before the Chinese New Year. So that's a calendar you can look at. And there's also another talk, also there's another opinion. I'll just show you all the different potential. Opinion was that like if the Taiwan election, the pro-independent loses, okay, they happen to lose, and then there's a big funding from Taiwan to support the Hong Kong protests, and then Hong Kong protests may die. Okay, that's a possibility. I do not know, but that's most likely the timing for the crackdown will be in January. So you keep that in mind. So if that December really have a deal as we expected, and then gold may get a hit, but the January before that could be a good buying opportunity. So this is the commodity. As you see, I mean, I made a call on my newsletter, pounding the table. That's about so that's December of last year. I said, really, it's time to buy gold, right? Buy as much gold as possible. So we have a very nice run. We have a very good run. And this year is very different than other year. You know that summer usually gold is weak. But this year gold actually opposite because it's completely driven by the political thing. And so that I a little bit disagree with the prior speaker, was gold this year is driven by investor, not by the physical demand. You see the Indian demand down by 70%, China was down like 30, 40%. So it's mostly by the investment demand and mostly driven by the trade war headline. So that's why I think the Hong Kong protests could lead to another round of gold. You look at the trick silver for the past year, and then platinum and palladium. I was first to pick up the palladium when it was like 900. That was a couple years ago. Now it's going very high. Now I like platinum versus palladium because you can replace the platinum with palladium and palladium with platinum, vice versa. So originally the catalyst converter was all by platinum. Now they found a cheaper metal with palladium to put that in. But there's a little bit technical issues for gasoline cars because their temperature is very high. But we can go, if you're interested, we can go to any details in the Q&A. But their diesel car, the platinum is replacing palladium, and then gasoline car, I think, gradually will replace that as well. So that's basically the thesis what we have right now. Okay, so we have a big rally in gold, just as we hope, and so far so good. It works until recently, okay, because a lot of things happen. Like you find a way to make money, and then you find it works for some time, and then everybody works. Everybody find out how it works, right? It's like everybody is smart, so they pick up very quickly. Now their gold is trading with all these rumors, and then people who has ears in the White House, ears in the Chinese government, they know what's going to happen. They traded a few days ahead of the announcement. So recently, it's getting difficult to trade. We have very smooth ride for almost 12 months, maybe 11, until recently. So that's why we need to think ahead. We need to see what's going to happen next. And what I see is we will consolidate for now. Unless there's a major incident, like I said, if something happened in Hong Kong or the trade deal, broke out. It's possible, right? So anything is possible. So that's right now it's in consolidation, and frankly I'm very happy to see what gold is doing, because gold miners are making a lot of money. If you notice, all these miners, their balance sheets are improving dramatically. They're getting a lot of cash flow, because there are a lot of mines designed for 1,000 to 1,200, right? That's where the mine. And think about it, if gold price is 1,300 versus 14 versus 15, their margin just going exploded. And then if you pick a good, just from those producer, right, with good cost profile, their cash is actually increasing. But unfortunately, this year is quite interesting that the gold rally didn't go down to the junior space. Okay, for many different reasons. One of the reasons was junior was so bad, has such a bad reputation, and people just go for ETF instead, right? ETF actually have much bigger market cap, so money doesn't go to the junior. I still have a very difficult year for the juniors. And right now it's a stock pickers market. So I'm here trying to introduce some ideas in junior. May not be the best idea, but something you can take a look and then think about if you want to invest. And let me see. That's it. Okay. So those are the companies. And let's go down again. I will introduce them later, one by one. So again, this is last page. I'm partnered with Jay Taylor. We're a very good friend for a very long time, and this is my website. And we almost out of time. We actually have 2 minutes ahead of time. That's okay. Maybe we can get started, and with Alex go first.